Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
All right, GM everyone. I'll give you a little GM from my buddy at New York Fashion Week who sent me this great cup with Bitcoin on the other side. Very nice. So I'm solo today. X is off welcoming baby number 2, so on paternity leave. Congrats to he and the wife, and excited for them to have their new baby. So you have to tolerate just me today. Talk about a bunch of things. I'll get to the reveal. Exciting times going on. So I do have the Bitcoin Friday pants on. I have the Bitcoin whale sock game today. Why? Well, the whales are accumulating at the fastest rate really that they ever have. And you say, well, that doesn't really make sense, Mark, because somebody must be selling because the price keeps going down. So Bitcoin prices, went from 107, 108,000 last year to, as low as 78, 79,000 here. I've recovered a bit, but that reflects a bunch of different things. We talked a little bit about this last week, where you've got the unwind of the futures arbitrage. So remember, you short the future, you go long the ETF, and the futures price is different than the spot price, so you roll down the curve over the course of the month. And, when that product first launched a year plus ago, you had about 11, 12, maybe even 13% roll yield. That number came down pretty dramatically to close to 5, 6%. And at that point, it's roughly the cost of financing, so people unwind. And this was one of the big myths of the buy, that people would look at the 13Fs and say, oh, Millennium owns 2 billion of IBIT. Well, yeah, but they're short futures, maybe even more than 2 billion, because they're mostly a market neutral shop, don't often take directional positions. So long story short, we do believe that that kind of unwind liquidity period was past. The other challenge for prices wasn't so much long-term holders selling, right? I think what's interesting there is that if the recent buyers are the ones selling, the people who came in, at 108, 109,000, didn't want to miss the FOMO, people were talking about going to 200,000, but those retail investors, some of them, unfortunately, came in on margin. And that did unwind pretty badly over the past 3 weeks because of the tariff nonsense. And I call it nonsense because we have 200 years of data on this. Tariffs are always a bad idea. They've never been a good idea for anybody. Free trade is better. But there's this interesting, I won't call it a rumor because it's not a rumor. It's like a narrative that's been created by somebody. I don't know exactly who that somebody is, probably Trump himself or Trump's team. But it's being promulgated by a whole bunch of different people, from influencers to mainstream media to bloggers, but it's to Twitter people. So it's this idea that, well, they're intentionally crashing the market to force Powell to lower interest rates so they can refinance the debt at a lower rate. Yeah, I kind of think that's what's going on. So the narrative kind of becomes reality. And I think the problem with that is the law of unintended consequences, right? All right, it sounds like an interesting idea. But the problem is, even when the Fed lowered rates last year, long rates didn't go down. They actually went up. It was the first time in history that had happened. You got the wrong directionality. And that's because China's playing a different game. We're going to talk a lot about how China's playing a different game and what I call the China playing go theory that I've had for a while, in that right 10-ish years ago, maybe it was 15, doesn't really matter. They figured out, in my mind, that the next war for global supremacy and most importantly, dollar hegemony or currency hegemony was going to be fought with chips, not ships. And everything started to revolve around digital superiority and chip superiority. And the reason that's so important is when we look around, everything that's going on, you have this thing about, it's, we're against China. The tariffs are really about China. It's not really about Mexico and Canada. It's about China. And here's the thing. We think by putting these tariffs up that somehow that's going to hurt China, because China, we exported all our, low-wage jobs and pollution to China years ago. And in exchange, we got really cheap stuff that we fill up shelves with and have nice lives with and have cheap computers and all things that we want. And that worked great. And as long as we had free trade, then we could enjoy nice things and they could get wealthier. Well, as they got wealthier, they're like, well, maybe. And one of the other things they did is they bought our treasuries. So with the surplus cash that they got from us buying stuff, they bought our treasuries, and it kept the cost of financing our hegemonic world reserve currency lower. Well, that was great. Well, now the problem is China has realized, we own all these treasuries. So if we not only just stop buying them, but actually sold them, we could get a bunch of money back by selling the treasuries and increase our currency reserves. So then our currency becomes a little more weaponized. And if we sell your treasuries, your attempt to keep interest rates down won't work, because you have to offer the rest of the people more interest to sell the bonds. It's actually kind of an evil genius strategy, and it seems to be working. And so this trade wars are easy to win is garbage. It's always been garbage. And China, again, what I mean by China's playing go is Trump and Europe and all the people that are all about, confrontational games. I joke, Eric, we're arguing about how to set up the checkerboard, and, people like Putin are playing chess. Well, China's not even playing chess, right? They're playing Go. And the difference is checkers and chess are a confrontational game, play in the center square. And Go is a relative advantage game. And you win by over time kind of engulfing your opponent through small strategic wins around the board. And we're just not good at long-term thinking. They think in 30-year plans. We barely can think now it's not even 4 years. You're like, well, you're pretty much only president for 2 years because you're a lame duck. And it's like, wow. So everything has to happen in 18 months. So back to, what does that have to do with Bitcoin? Well, the problem is if you bought Bitcoin on leverage and suddenly the stock market, which was hugely overvalued, I mean, the most overvalued it had ever been. And that's a big statement. Worse than 1929, worse than 2020. In every way, price to sales, price, CAPE ratio, Buffett indicator, market cap to GDP, all these things were pointing to just severe overvaluation. Yet we had the highest weighting of individuals invested in stocks in history, and we had the highest level of margin debt in history, which that's a cocktail for a parabolic move, but it's also a cocktail for the other side of the Eiffel Tower pattern, which is sharp, stairway up or escalator up, elevator down. And that's kind of what we saw, right? We had a swift correction, Mag 7 just decimated. I mean, decimated year to date. I mean, down high 20s%. The NASDAQ, just hit down 20. S&P hit down 10. So in a correction, not a bear market, NASDAQ in a bear market. And all of that led to margin calls. And in a margin call, if your assets are down, you can't sell that asset to cover. So you got to sell what you can sell. And normally you sell bonds, but in this case, you want the bonds because now you're afraid, right? Now you're afraid of trade wars. And so historically, stocks and bonds were uncorrelated, and particularly uncorrelated in times of stress because people fled to the safety of bonds. Well, in the last decade or so, that started to break down. People said, oh, it's because we're in this different regime and there are too much debt. And well, all that made sense. But the reality is now we're seeing again, because TLT is actually up nicely. Not huge, but up nicely as a reserve after bottoming kind of in December. And so you can't sell your bonds because you need those as safety. You don't want to sell your gold this time. In 2020, you did have to sell your gold because you had to sell everything. And this week was the 5th anniversary of the shutdowns, the lockdowns on March 11th, 12th. And Bitcoin fell 50% in 12 hours, and gold was down and bonds were down. Everything was down. The world, everyone thought the world was ending. It was cold virus, but flu virus, whatever. And world didn't end. And it won't end when they introduce the next one either. So bottom line is margin calls happen. You have to sell something. So people sold their Bitcoin. I wouldn't, right? In fact, what I would do if I needed liquidity, I would go to Arch Lending, portfolio company, shameless plug, and I would borrow against my Bitcoin and use that for liquidity purposes. I just wouldn't sell it. And it should be your base holding for your savings. And then you should use companies like Arch to create liquidity so you can do other things. And that's the financialization of Bitcoin as the base layer of money that is coming. So it's pretty exciting, and we like being part of it. So the second part of that is, what's going to happen with the trade wars? And, my guess is the plan is going to kind of work, but kind of not work. So what do I mean by that? I mean, we are certainly crashing the economy short term, right? So we went from, plus 4% expected growth in Q1 on the GDP now to minus 2.8. And maybe it doesn't end up quite that bad. But look, there's a great study that was released, I think it was actually this morning, maybe it was yesterday, it doesn't really matter, that said, if you look at the last few years, 80+% of the jobs created were created by the government, Department of Education, Department of something else. And so government jobs. And now Doge is getting rid of a bunch of those government jobs that maybe weren't real jobs in the first place, but that's another story. That's the BLS nonsense of the birth-death ratio. So you got that. And then a big part of GDP, as much as 75% of GDP, was just deficit spending, fiscal spending. That is all sliding. And the deficit, this is an interesting point, the deficit still isn't going down. So despite all the headlines about how much money, is being saved by Doge, the deficit number is still pretty big. And that's because Elon doesn't really have power to stop spending. He can uncover problems, but at the end of the day, Congress really does control the purse strings. It's just like the executive order to establish the Bitcoin Strategic Reserve, even though it was really a digital asset stockpile, and explore a Bitcoin Strategic Reserve. He can't through executive order, decree that the Treasury do something. Just can't do it. And everyone's like, no, they can. I'm like, no, they can't. And so, well, but what if they do a budget neutral? Doesn't matter. They can propose all they want. But at the end of the day, a bill like Lummis's bill, Senator Lummis's bill, or a different one, has to get through the process. You know, I'm just a bill. Yes, I'm only a bill. From Schoolhouse Rock. If you don't know what Schoolhouse Rock is, look it up. It's very cool. And show it to your kids. But that has to happen for there actually to be a creation and incremental purchases. Like executive order can say, okay, we're not going to sell any more of what we've already seized. That's the digital asset stockpile. Okay. And you could actually, quote unquote, include the shitcoins, vernacular, that are in there. And despite Garlinghouse and Hoskinson's, best efforts to try to convince Trump and, the other people that you should include these other tokens, which makes literally no sense. I mean, the idea of having a non-decentralized, majority-owned, centrally controlled ledger be part of a monetary asset is just complete nonsense. I mean, it boggles the mind how much nonsense it is. And even you could say, well, Bitcoin's not money. Well, it was intended to be a peer-to-peer electronic cash system, okay, to allow you to transfer value between individuals, peers, without a financial intermediary, okay? Then it became clear, because of its scarcity and its hardness through proof of work, that it had the elements of gold, but better than gold, more divisible, more portable. And so gold, right, is money, the only asset that exists in the absence of liability. And it's a commodity and a currency. Same thing. Bitcoin is claimed to be a commodity or classified as a commodity, which we talked about last week. Was be careful what you ask for, you might get it. Not necessarily a good thing, because ultimately then they can have the futures against it and create paper to push the price down and manipulate, spoof. So, but it can be a commodity and a currency. And so the currency portion of Bitcoin, the base layer of money for the next 5,000 years, that's the only thing that should be in a strategic reserve. Full stop. The only thing. None of these other tokens have any claim to be part of that. Not Ethereum, not Solana, definitely not, XRP and Cardano. No, N-O. So everyone's like, well, when the SBR? Well, if the bill gets passed, or when the bill gets passed, I actually think it probably gets passed. We're seeing states, they're going to pass. Someone's going to pass it. I think maybe it got through Utah, or maybe it was close. Texas was close. North Carolina was close. And then they're like, oh, we need, the treasurer. Brad Browner used to work at Moore Creek. Great guy, fantastic leader for the state. I think that will happen eventually. The states will start buying. And then you got the game theory of the other nation states around the world. China now talking about a couple $100 billion. These are real numbers, right? Big numbers. And, on the flip side, how important this was like put in our face again this week by Christine Lagarde. I mean, she actually said live at this meeting this week that, we have a way to convert savings, her words, excess savings, into new growth. So basically what she's saying is she's going to take your money. If you leave your money in the bank, they're going to take it. They're going to seize it. The ECB, and that's the problem with fiat. Remember, if you put your money in a bank, and I have money in the bank, and most people I know, in fact, I have this debate with Bitcoin maxis all the time. Like, fractional reserve banking is evil and banking is bad. I'm like, okay, name a country that you would live in that doesn't have a fractional reserve banking system. I'll wait. because there aren't any. And fractional reserve banking is not the problem. It's the abuses of it and the bad people and over leverage and over rehypothecation and all the things. But the idea of fractional reserve banking is not a bad thing. And ultimately, the issue is are there controls and, the right level of reserves and all that. But at the end of the day, if you put your money in the bank, that money is no longer yours. It's the bank's, and they can seize it at any time. Now, they don't most of the time, but in 2012, if you were in Cyprus, you woke up and they took 3/4 of your money to pay back the oligarchs in Russia, which is kind of a bad plan, but not unusual, right? And people at the top always win. But we are at this point where the banking system has a huge problem, right? They were forced to buy all these bonds. They now have unrealized losses on these bonds, right? They bought them at 0% interest. Now interest rates are 4.5%, 5%. They have massive, the largest, unrealized losses they've had except for the global financial crisis. And the Fed has big unrealized losses because, again, they were the buyer of last resort, QT. QE, quantitative easing, where they're buying in the bonds. And you can't sell these things at a loss. So what you need is to get interest rates down. So back to Trump and trade wars. And so if he's going to crash the economy, well, if the economy is crashing, then there's a window for the Fed to say, well, yeah, I guess I need to stimulate. So I need to cut interest rates, increase liquidity. The problem with all of this stuff is it's like pushing a ball over a hill. If you push it too hard and you lose control, it's going to start rolling down the hill fast. And so you could push us into not just recession, but if you go all the way back to, and I wrote a long paper about this, letter about this back when Trump was first running, that there were eerie similarities between the way he talked about policy and Herbert Hoover. And Herbert Hoover was, president in the Great Depression, up into leading to the Great Depression. And, Senator Smoot-Hawley or Congressman, I can't remember, one is a senator, one's a congressman, and Smoot-Hawley tariff bill, which was the dumbest idea to deglobalize at a time where we needed globalization post-World War I. And long story short, we turned a garden variety recession into the Great Depression through a bunch of policy errors, including imposing tariffs. And then he talks about tariffs in the same way, but I'm not Hoover, I'm McKinley, because McKinley did have a short window where the tariffs appeared to create that, but it was really we're coming out of the free banking era, and not really because of the tariffs, but correlation is always not causation. So I do think they could lose control and things could get ugly. And there's a lot of fluff in the equity market. And there could be a lot more unwinding of leverage, which in the short term actually could be bad for Bitcoin. I counter that with, should the game theory really start with nation states, actual states, corporations? There's a lot of corporations. I'm on the board of one Metaplanet that, are emulating the MicroStrategy, Bitcoin treasury strategy. Another portfolio company, Bitwise, just launched OwnB. I love that ticker. That's awesome. I mean, not only is there innovation, investing in innovation, but then the ticker is kind of cool. OwnB, Own Bitcoin. So it is an ETF of the companies that have Bitcoin treasuries. And I think Metaplanet was like number 6, MicroStrategy obviously number 1, but then there's a whole bunch of others around the world. Very cool product. So that would offset, and it's just supply and demand. So I'm still of the belief that we probably don't go up for a while, because this time of year, late March to April, we normally have a bad period for Bitcoin because, 3 out of 4 years. In the years where the previous year is decent or good, people have to sell to pay their taxes. So we have a bad period before Lunar New Year, which happened, where people fill up the red envelopes with cash and they can't put Bitcoin in, which they probably could if they figured it out, but virtual. But they haven't. So we had the Lunar New Year drop, and then we have the U.S. tax drop. Because last year was such an awesome year, up 130+%, a lot of people are going to have to sell to pay their taxes. And, they can't sell their meme coins because their meme coins are down 90+%. They can't really sell Ethereum because it's down. Can't really sell Solana. So basically, they're going to have to sell Bitcoin. So I do worry that the next 4 weeks could be a little rocky. Maybe I have to wear my roller coaster socks early. So all that said, all right. So let's talk. Talk about China trade wars. Let's talk about chip wars. So every day in the past couple of weeks, somebody is one-upping somebody else on chips, new computer processing chips, new quantum chips, and every one of those stories ends the same way, with U.S. companies one-upping each other, and then China one-upping them orders of magnitude. And whether it's the new Huawei chips being much, much better than NVIDIA chips, or whether it's this new quantum chip that is 1,000 times better than the Microsoft Miracle chip. How can that be, right? How can China have such dominance? And I'll tell you how I can give you a sense of how much dominance there is. We are trying to restrict exports of our chip companies to China. Again, that's closing the door after the horse has already run out of the barn. This idea that we should restrict NVIDIA and other companies, Avago, from sending chips to China is silly. The days of them stealing our tech are gone. They have better tech now. They have more innovation. They have more patents. They have more citations. They have more engineers. They are now innovating. And it's a very interesting dynamic. So, you had Trump strong arm TSMC to announce $100 billion investment in the U.S. Sounds good, right? Yeah, we've been talking about bringing chip manufacturing back to the U.S. after, remember, Intel was the center of the universe in chips in 2020. Over the previous decade, their stock had run up 20-fold. It looked literally like a rocket ship. And today it's still below where it was, like 40% below where it was in 2020. So it made the Eiffel Tower pattern and hasn't come back since. And it's not because we didn't spend enough money. It's not because they're not good people. They just announced a new product this week. It's they don't have the same level of tech talent, which is amazing. It's probably too strong a thing to say because, you're full of shit. Like, well, maybe, but the data is pretty compelling that, Huawei continues to out innovate. Xiaomi I'm probably pronouncing that one wrong. My Mandarin accent is bad. But they are releasing new chips. We saw what DeepSeek did, and DeepSeek's getting ready to release R2. So, kind of shifting a little bit over to AI because it has to do with chips. AI has been just an onslaught of model after model after model. And the same thing like with chips. And, at the end of the day, U.S. companies trying to outdo each other with, Claude and ChatGPT and Gemini and all these other ones. Yeah, that's great. So you keep them. And then China, DeepSeek, and then Qwen and Kimi and there's a new one coming from Alibaba that they just released QWQ, maybe Q2Q that I can't keep them all straight. That's equally as powerful as DeepSeek already, and they're claiming they can enhance it, better reasoning and better inference, and all of this bodes well for our ABCDs, right? So AI, blockchain, chips, data. So the intersection of these companies is pretty extraordinary. When you think about if you think about how progress happens in compute, is, you know, the hardware, the thing that I'm talking to you on has to happen first, right? You have to have the chips and the frame and all that. But then over time, you have to get the software to make the hardware more efficient and more productive. And as I said, when I had my first computer, literally, it was a luggable, computer. So I could take it to college in the 80s. And it weighed like 26 pounds. It was a K Pro. It ran on CPM, which was a far better system than DOS. I mean, orders of magnitude better. But to write a paper, I had to type the command lines to format, like margins X and spacing X. There was no software to do that for me. There was no Word. There was no, Google Docs. So it was kind of funny. But now I have this little laptop that I can lift up, doesn't weigh, I think it weighs 2.6 pounds instead of 26 pounds, and doesn't take up my whole desk. And the screen is big instead of the little tiny screen with the green letters. But things evolve. And so there's this stair stepping of hardware, software. So we had we had hardware innovation. And then, DeepSeek is a great example of the software saying, all right, we can only have 1,000 chips or however many chips they had, 10,000. So we just write better software and we'll utilize the training of the other models. Oh, well, you can't do that. Well, why not? I mean, that's exactly what the models are for. I can take all this data, like all the data in the world, and I can ask a question to an LLM and it'll give me an answer. And then I could train on those answers rather than training on all the data. Interesting concept. Sampling, no different than how our brains function, right? And all the information around us, all of that, we're not processing it all. We're only processing what we're focused on. So you can see all the stuff behind me, but you're not focusing on it. Well, maybe you are because you don't want to look at me. But by the way, I'm wearing the Carolina blue today because it looks like our Tar Heels are going to make the tournament. So after beating Wake Forest last night, we played Duke tonight, but they're resting Cooper Flag, which bodes well for us. We played him well when he was out of the game at Carolina the other day. So we'll see. I'm not sure we can beat them, but I still think we should make the tournament. And we'll see what happens. But so it's Carolina Blue Day as well as Bitcoin Orange Day. Think about where we are in this development of AI tools. So LLMs are being commoditized. They're basically being free. Everybody's going open source. They're providing these tools. Alibaba's doing it. Baidu's doing it. Tencent's doing it. And again, China. And China stock market going crazy. U.S. stock market going the other way. Why is that? I thought Chinese companies were bad. No, again, that's the narrative. China, go to China, right? Go to China, visit China, go to some of these cities and just see the tech marvels and how efficient they are. I love the chart of high-speed rail in China, high-speed rail in the United States. We have 120 feet or some crazy thing, and they have thousands and thousands of miles of high-speed rail. And heck, even Japan. I'm heading to Japan for the Metaplanet AGM next week. And, I'm excited to take bullet trains, between Tokyo and Kyoto and a bunch of places. So very, unbelievable to me that we don't have a high-speed rail from, I'd love it from Chapel Hill to New York, but from New York to Florida, or from, Seattle to California, or California to, LA to Chicago. How could we not have that? Doesn't make any sense to me. But, the distances are long, but China's distances are long too. Japan's aren't very long. So that makes a lot of sense that they have it. So AI is clearly, integrating into all of our lives. The new thing is agents, right? Each company. First, they announced the LLMs, and those are being commoditized. Now we're going to have agents that sit on top. It's kind of like the protocol layer and the application layer. It's not exactly like that, but similar. And these agentic tools are actually going to do things for us, right? Like, you know, think about what Kayak was. It's kind of like the Web 2 version of an agentic AI, in the sense that you could go to Kayak or you could go to Travelocity and it would search Travelocity. You could go to Expedia and it would search Expedia for prices of flights or hotels. Well, you could go to Kayak and it would search all the different sites. Yeah, that's a little bit better. Now there was a little bit of, how did it prioritize, and was people who paid getting promoted? Those are always a problem. But at the end of the day, these agentic tools will go, search the internet for things. And, you could say to an agent, hey, I'm thinking about what we're doing. I'm thinking about taking my family to Japan for spring break. Could you plan out an itinerary for 7 days and arrange the dinners, make reservations at the restaurants, and buy their train tickets, which is a pretty big hassle for you. Their websites are still mostly Japanese, which I get because they're in Japan. But we figured it out. But an agent doing that would have been really cool. So we're almost there. And that's convenient stuff. But will there be an agent where you can say, you know what, I need to write a research paper for school. Could you go search the Library of Congress for, all the information, best information on this topic, and summarize it for me? And people say, well, you're supposed to do that yourself. Well, again, the physical searching for the books, it's probably better done by something else. And this, reading the whole thing and summarizing, now that I would argue is, it's borderline not the best. But at the end of the day, you're reading the same materials, and if you're looking for facts, there's no problem, right? Me having to search for a date in a bunch of text, if a computer can do that faster, I see no problem with that. If I ask the computer to create my thesis, well, that's less good, because now I'm not doing the work. But the synthesis of the facts, ultimately, that's what technology does for us. It gives us a broader set of knowledge. In fact, I think about this. Actually, I thought about this morning in the shower, which is where, not that you need that visual, but that's where most good ideas. Why? Because your subconscious was working on something, but you had the aha moment in the shower. Is AGI, general intelligence, isn't really, to me, achievable. And we've talked about that in the past. But what it is achievable is general knowledge. And to me, that's what computers really do, is they give us access to all the knowledge in the past. And at least at this point, they're not creating new knowledge. Now, maybe they will at some point. And in theory, some AIs can synthesize stuff and create new ideas, or new proteins, or so clearly you can do that. But that, to me, is where the human brain still differs in how it thinks in 3 dimensions as opposed to 2 dimensions in brute force. But AGK, general knowledge, to me, makes my life better, because I can go find something easier, or I can go utilize the tools easier. I don't have to remember the formula for, such and such. I still have to intuit what I want to use it for. And I still, in our job, right? If we're trying to decide between, should we invest in cooling technology company? Because when you do a lot of computing, the computers heat up. So should I do immersion cooling? Should I do, direct-to-chip cooling? Or should I use this other company that's got a way to replace electrons with photons, and then you don't have heat? That's kind of interesting. So, and it's probably a stepwise progression. Immersion cooling. Clearly, there's a market for that for right now. And then maybe it's going to be more direct to chip. But ultimately, getting rid of the heat is probably better. Let me transition to my version of chart of the week. I don't have it to show on the screen, which would be better. But so I had a conversation with ChatGPT today. Normally I use DeepSeek. So I asked the question, which is, a normalized one, that, how many chips do we all use every day? And what's interesting is that it pulled up the data and it said, if you look at the things that we're using, so we got our smartphones, so we got our laptops or PCs, we got our smartwatch, we got our smart TV, we got our cars, home appliances, and Internet of Things like smart speakers, thermostats. And, on average, you're talking about 125 to 150 chips being used by you or me every day. Yeah, that's pretty good. Now, the projection is by 2035, or by 2030, so 5 years from now, we'll be at 300 to 500 as chips become more ubiquitous. And, by 2035, that's 800 to 1,000. And so, let's see if this works. So the chart of the day, which again is not as good as when X does it, is, it looks backwards to me, but hopefully it looks forwards to you, that's the chart, and it is an exponential growth curve, which is the way things are going to happen. So if you're on YouTube, you can see this. If you're not, please go to YouTube. And, I think what's interesting about this is not only is the number of chips going to continue to increase, but the speed and strength of those chips is going to, and it goes to this issue of chip wars. So we in America, again, American exceptionalism, think we're going to stop China becoming independent because we're going to stop selling our chips to them. They don't care. They have already taken enough technology from whether it's Taiwan or from us or every place else, and they now have domestic producers, and they dominate. I mean, absolutely dominate, like 90% market share, the big chips, right? Bigger than 12 nanometer. The subscale is all Taiwan, which again, China believes is part of China, by the way. Ask anyone in mainland China and they'll tell you. Ask anyone in Taiwan, they'll say it's not. But at the end of the day, there's a whole layer of chips that they don't need to be teeny tiny because they don't have to fit in your phone. They can fit in your car. They can fit in a server. There's even, new company Cerebras that competes with some of the companies like Grok that we invest in. It's got this giant chip. I mean, it's literally giant. And the problem is if you let it cool too fast, it can crack, which that's kind of a flaw, if you ask me. Because again, it's going to generate a lot of heat because it's so big. So at the end of the day, investing in these technologies, semiconductor technologies, I just had a nice chat. I've been friends with Jim Pilata for 30 years. And we kind of, miss each other, and we go time periods where we don't talk to each other, and sometimes I talk to each other a lot, and invested with him when he was the PM at Raptor, which is part of the Tudor Group, and he was an amazing tech manager, had one of the best tech hedge fund years ever. He was like 91% in 2020. I mean, just incredible. And then protected capital in the next 2 years in the crash. So really talented guy. And he has transitioned, as I have, to kind of be a late in life venture capitalist. Now he's done some other stuff with sports teams, but he's now got a semiconductor fund that he's raising for. And he's gotten some of the big guys from his past life where he invested in these semiconductor companies. Now the retired CEOs are saying, hey, we can do this new fund focus on it. And so we got talking about chips, and it was awesome. So I think the innovation in the chip space is at a knee of the curve kind of event. And, I've showed this other chart. I don't have it with me, so I can't do two charts of the day, but that would defeat the purpose, right? Which is, if you look at the technology that's increased, in the past 100 years is super parabolic, right? We had no computers, and now we have supercomputers that fit in our hand. But in the next 50 years, the projection was that the technology would increase by a quadrillion X. And I think that's 15 zeros, if I have that right. It's hard. It's a mind-boggling number. So with that mind-boggling number, and with this, focusing on innovation as an asset class, focusing on the A, the B, the C, and the D, what we do here at Digital Currents, we will remind listeners to rate, review, and subscribe. I don't do that as well as X does. And also we remind everyone to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.